This is Lauren Moon. I'm here with Don Garman. Happy Tuesday. We just got out of our investment committee and wanted to tell you what we talked about. But first things first, it was Mindy Garman's birthday on Friday, right? So to celebrate, some of the Mirador crew got together for a poker game and there was a lot of back and forth. I was not there. So I'm putting Don on the spot to give us the high point and low point.
Well, the high point was that I think my wife had a nice birthday and everybody was in great spirits. And the high point for her was she won all of our chips and took all of our money. And the low point for me was that she took all of my money as well. So, but no, fun was had by all. And
was that her birthday present or did you get her something else?
Well, yes, there were several birthday presents along the way, but what she wanted to do, which I thought was cute, was get the gang together on a Friday afternoon and do a poker party. So that was a nice afternoon, time well spent, and I think fun was had by all.
That's great.
Yeah.
So our investment committee, we talked about a few different things today. No real major shifts, I guess, in the last week or so. I think talking about where the markets are right now, maybe we'll start there. Earnings have been coming out over the last week. Some companies are missing and getting punished really badly. Others are doing fine and being rewarded significantly. So Don, one thing we talked about is in the long view strategy, how are you kind of digesting this information for how you're positioning our core strategy?
So that's a great question. And yeah, we sort of beat this topic up at length. I would say one of the things we've done well is that we've, for better or for worse, avoided the bar fights, along the way that seemed to break out here and there in the markets. And we discussed that we are in a bit of a shift, which is that, coming out of COVID and the reopening euphoria and then the Delta variant and now, with the therapeutics and the drugs that seem to be kind of repeatedly being announced, there is a real feel that the end is nigh in terms of the real direct impact. Why our kids are still wearing masks is a little bit confusing to me, but I will set that aside. But anyway, there is a real feeling of the reopening is real and it's happening this time. And so that dovetails with that rapid growth that a lot of companies, the beneficiaries of the pandemic, experienced. We've sort of hinted at this for 6 months, which is, what is the next act? Where is the next, black swan event that can really catalyze crazy amounts of growth in these very, unanticipated pockets of the market? Well, and now we're finding when companies are kind of tamping down the expectations, like you said, they're not getting softly, sold off, they're getting violently crushed. And so one of the things I think the long view has done well over, 2.5 decades is kind of be involved with the growth of the pie globally, but not be so, committed to one subsector where when the winds shift, it sort of takes us down. And so that has, that's kind of where we sit. And as you've seen, and you were very much in the middle of, some of these positions we just exit. And because we can't make a reasonable call on how cheap is cheap enough, and are we really committed to these positions long term? So when we don't have a lot of conviction, I think sometimes the most prudent thing to do is to step aside. And so what I did think that came out of committee, which was very interesting, that absolutely warrants attention and our elevated levels of concern, is the fact that the absolute level of earnings in 2022 is now turning, not from growing, but actually shrinking. And what's being signaled is that, wages have risen, input costs have risen, supply chains clogged, have pushed through the system. And we've talked about transitory or not transitory. We don't need to make a call on which way it's going to be. But what we do need to acknowledge is that the earnings pie is the kind of, the meat and potatoes, the healthy diet of the prices support of the market. And if those are going to actually absolutely decline, then we will need to be taking a much more cautious stance in 2022 than we have this year. Right. I think how many years in a row now have we said here we are going to kind of skip through with another surprisingly positive year on the return line. And this year was supported by earnings, which is great because again, a lot of the workers that, weren't being factored in didn't roll down to the cost line, but we're not going to have that excuse next year. And I think we're going to have to learn to live a little bit more on fundamentals, which has been missing in the world of stimulus and constant, drugs to the vein. So how that's going to shake out is anybody's guess, but I would say there's a more cautious tone, at least that's how I feel going into next year, than I felt in quite some time.
Right. So. Well, I think, and to the counterpoint of if we don't have as high conviction because there's been some sort of fundamental change, we'll get out when these positions get clobbered. Likewise, if the reverse is true, we'll add to them. So
absolutely, yep.
We're not afraid to do that. We talked about a couple of those that we might do today. Another thing that I think is interesting, just in terms of kind of a thematic thing that you've been adding to, is more in the kind of reopening travel sector as a whole. So, I mean, I don't think there's a whole lot that has to be said there, but if you.
Yeah, I mean, one of the things I think it's fair to highlight is, we can look back and easily see where the market caps of these businesses were 3 years ago, when there were kind of, conventions and, regular normal economic activity and these kind of entertainment hubs. And, we know in 2020, we went to 0 conventions and lockdown. And then a lot of businesses have said, we're going to be very slow and reluctant to move all of these things back to in person as we see the variants and how they're going to play out. And I mean, I think we can say with confidence that when there are opportunities to re-engage in person, people are not hesitating to do that. And they are flooding to places where they're allowed to do that. And you can look at these concerts and every in-person conference
sporting event,
sporting events. And I think, we can, the same way that it wasn't clear at the beginning of COVID, I remember how naive we all were when we were expecting that it would be over by Easter 2020, right? Remember, it was going to be over by Easter 2020. And we are going to come into Easter 2022. And I think it's going to just be bedlam and bananas. And I think that amount of pent up stuff is going to be a durable, investable theme for 2022. So if we're looking at companies that are still half of the market cap that they were then I think there's some room in the tank to have quarter, 2 or 3 or 4 quarters of surprised upside expectations, because the expectations last year and into this year got just obliterated. So we've got to let that come back online as well. So that's what trade we're looking to exploit next year. And you'll all see it, as you get your email notifications and you look in your accounts for what's new that wasn't in there 3 months ago, it'll be pretty clear what we're talking about.
Great. Thank you, Don.
Yeah.
So hope everybody found that informative. We're, of course, mostly talking about the Mirador long view strategy, which is our core strategy. The other strategies we run are, for the majority, a little more aggressive and exploit different themes. But the long view strategy, we'd say, really reflects our view on the kind of market environment as a whole. So, well,
before we tune out, I'm going to say you are leading the kind of, more leading edge technology and kind of edge of innovation strategy for us. Why don't you share some of the things that are on your mind? You've made some sort of more major shifts, and what are you signaling and what are you thinking, in terms of a holdings signaling perspective? What are you trying to say?
Well, I think there have been a couple positions that had this astronomical growth expectation. Fortunately, we did some trims before earnings season slaughtered them, but there's some that we're holding as that's happening, and there's some that we got out of our trim. So that's a little broad speaking, but that's how that whole growth theme is playing through. There's definitely some companies in the innovation technology transformation strategy that are valued largely on very speculative growth. And so as that growth slows, we're making adjustments on that front. An area that I have been adding to I'm sure a lot of people have noticed there's all this noise about Bitcoin and crypto and blockchain ETFs coming to the market. So we happen to think, maybe I should say but we collectively think that an allocation to this space in the right amount can be appropriate. But we're very cognizant in how we obtain that allocation. So why we've held off or how we've approached it in the past has been, you really aren't actually getting direct exposure, or there's extremely high fees, or there's just a lot of opaqueness around what exactly it is you're holding. So some ETFs came to market a couple weeks ago that meet kind of the highest quality standards, and we made an initial allocation in both the crypto and blockchain technology ETFs through the technology strategy here. So I'm excited to watch how those do over the coming months.
Yeah, and I think what we've learned about that strategy, which is no big revelation or surprise, is it moves. It moves in both directions. And, we've had just a great, period of rapid growth, and, who knows what comes next. But I think people that are in that strategy just need to be prepared that it is sometimes occasionally not for the faint of heart. But if you're a believer in the pace of technological change is still accelerating and will be for the next 2 decades, then it's probably good to have an allocation there for some people if that's what they want.
And we talk about this all the time. It comes down to what's the appropriate amount of risk to take, and that might just mean a small allocation to something like this.
Yeah, seems to be I think the prudent course, even for people that are interested in that topic. So I would say this preemptively, we hope that everybody, of course, is safe and healthy. But as we have Thanksgiving coming up in a couple weeks, we will once again express our gratitude to you all for, first of all, for the wonderful growth. The fact that you are sending your friends and family in to visit with us is an incredible. It's an incredible honor to be able to serve you and want to have you have your friends here as well. And thank you for everything. And we hope everybody has time to spend with their family and have a great Thanksgiving. And for sure, whatever 2022 and beyond brings, we will be here battling through it as best we can for all of our benefits. So anything else, Lauren?
No, that's it for me. Thanks,
all right,
everyone.
that's it for now. Thanks, everyone. Bye-bye.